Today, we're diving into the massive world of corporate debt. Is it the trigger for the next financial crisis? Let's start with a number. Back in 2019, that was the scale of global corporate debt. In the US alone, it hit a record high, a huge red flag for financial stability. So how did we get here? Well, to understand the risk, we have to go back to 2008. You see, the cure for the 2008 meltdown came with a pretty powerful side effect. After the crisis, central banks dropped interest rates to basically zero. Money became incredibly cheap. The idea was to get companies borrowing again, and boy, did it work. Maybe a little too well. Since safe investments paid almost nothing, investors got desperate and started chasing riskier returns. And that led to a huge boom in really risky assets, starting with what we call junk bonds. By 2018, the majority of all US corporate debt was sitting right around junk status. At the same time, safety nets for investors just vanished, thanks to these risky covenant-light loans. All this cheap money also created a new problem, propping up failing companies or zombie firms. The number of these zombie firms just exploded, creating all these hidden weak spots in the system. So the whole system was fragile. And then March 2020 happened, the ultimate stress test. When the pandemic hit, the big fear was that the bond market would just completely freeze up. And for a terrifying moment, it looked like it was happening. Investors panicked, pulling out billions. To stop a total catastrophe, the Fed jumped in with something they had never done before. Okay, so they dodged a bullet in 2020, but the real problems, they never actually went away. Even the Fed's own reports show key parts of the system are still leveraged to the hilt. And now there are new threats on the horizon, including the growing dominance of AI in trading. The core problem is still here. Today's corporate debt is just way riskier than it used to be. Which raises a really big question. Is our financial system just addicted to emergency bailouts? And now, the biggest buyer in this market isn't a person. It's an AI. Is that a hidden choke point?